Do you know that every SBA loan comes with a guarantee that allows SBA lenders to take a chance on your loan, especially if your loan is borderline? Well, that is good news for you. But do you know how the guarantee works? And more importantly, how much it costs? In today's video, we'll talk about that and much more. Let's get to it. Hey everybody, welcome to my channel. I am your host, Leo Landaverde, business broker and commercial lender, helping you buy or sell a profitable business. If you are a small business owner looking to increase your wealth or double your sales by purchasing already a profitable business, or if you're an employee, a high-paid person, but trapped in the rat race and wanted to get out by purchasing a profitable business, you are in the right place. Please subscribe to my channel and don't forget to hit the bell and you'll be notified every Thursday when a new video comes out. Okay, so first and foremost, what are SBA loan guarantees? Well, in order for the SBA to encourage small banks or SBA lenders to give loans to small businesses that otherwise would not be funded, the SBA will guarantee payments anywhere from 7 to 85% of the actual loan to be repaid back, which what it does, it gives peace of mind knowing that if the worst thing happens with your loan, the loan will be repaid. So in order for that loan to be repaid, the SBA has to set monies aside. And what they do is that out of every loan, there is a percentage of that loan that gets set aside on a pool of money that is used to pay back loans. The cool thing about it is that a lot of people will not be able to get an SBA loan, especially loans that are over $500,000, without the SBA loan guarantee. So it helps ensure the program by you participating in the program, and also gives you the best chance of getting a loan. Now, the important thing to understand is that even if you say you didn't go with an SBA loan and you went with a traditional commercial loan with a local bank, the chances are that the maximum amortization for that loan would be anywhere from 3 to 5 years. So what would it do? A $500,000 loans to be repaid over 5 years versus a $500,000 loans to be repaid over 10 years. Your monthly payments will be dramatically higher on the shorter amortization. So what it does is spreads the cost, the amortization, and the monthly payments over a 10-year period, which allows you to have a more manageable payment, which helps with the cash flow. So everybody wins. The lenders are actually making fees by making these loans. The SBA is allowing small business owners to be able to get those loans, and you get to use the loans proceeds for whatever you want. It's a win-win-win for everybody. If this video is helping you and resonating with you, please do me a favor and like and comment on this video. Comments and likes are the currency of the YouTube algorithm. So every time you do that, what it does, it allows the algorithm to serve this content to other people like yourself who can benefit from it. So please, I thank you in advance for doing that. Thank you very much. So how does the guarantee work? So when a conventional lender feels that a prospective borrower has insufficient collateral to be able to securitize the loan to the point that the lender feels comfortable with the collateral that is going to match the amount of the loan borrowed, that's when the guarantee comes into place to take the place of the collateral that you would have otherwise had to provide to guarantee the loan. Remember, there are no such things as signature loans. Any commercial lender is going to want to collateralize, or they call perfect, the security interest on their loan by grabbing whatever they can, whether you have equity in your house, whether you have all the business assets. So whatever they can to ensure that if the loan defaults, they can get repaid back. Well, the SBA guarantee takes the place of that. So, and that's how it works. So now let's talk about the SBA loan guarantee requirements, because there are some requirements. Your business has to have certain criteria to be able to meet that guarantee framework, and those are: you have to be small enough to fit the SBA's criteria of a small business. But the good news is that 99% of small businesses would actually fit the criteria of what the SBA calls a small loan. So a small business, I'm sorry. So probably a small business that has less than 500 employees could be considered a small business. So chances are most of you will have at least or less than 500 employees. The type of business acceptable to the ABA, it must be for profit. It has to be in, I think most industries and industry verticals will qualify, but there are some that are not, and I'm not gonna spend the time to tell you which ones are not, but there are some that are not allowable. Especially it's illegal gambling or anything illegal activity, obviously it wouldn't be allowed. You must be for profit. It must be independently owned and operated. So if it is part of a subsidiary of a larger corporation, that probably would not work. So those are the big criteria for the SBA loan guarantee. So next I'm going to tell you what the cost is associated with these guarantees. So, and it's I'm going to read here from a kind of a tier system that the SBA has for loans that are $150,000 or less. The guarantee will cover up to 85% of the loan, which is really good news for you. And the cost is 2% of the guaranteed portion. So of the 85% of the $150,000, you'll pay 2%. So, which is, fairly reasonable considering that without it, you probably wouldn't have a loan. Between $150,000 and $700,000 loan, then the SBA guarantee drops from 85 to 75% of the loan, and the fee is 3% of the guaranteed portion of the loan. Between $700,000 and $1 million, the guaranteed portion of the loan is 75%. So which means that the exposure for the lenders in this case is 25%. So you're not repaid. The SBA will cover the 75% of the amount, and then you will have to make up the difference yourself or with the collateral, whatever collateral you pledged. And between 1 and 5 million, it is still 75%, but the cost is 3.5% of the guaranteed portion plus 3.75% of the guaranteed portion over $1 million. So for the first million, it's 3.5. From 1 to 5 million, it's actually 3.75. So there is a cost associated with it. And so if you're working with someone like me, all of that will be clearly defined as the lender actually begins to underwrite the loan, and they're about to give you, you can't really have that guaranteed without having the loan approved. So first you have to go through the underwriting process to make sure that that loan is going to be approved, and then part of the closing fees are going to be the SBA guaranteed fees. So hopefully this video helps you make your decision about or learn more about the guarantees for the SBA program. For a limited time, I'm giving away my cash flow calculator. It's a great little Excel tool that allows you to calculate the net cash flow post the debt service, which means the principal and interest payments on any loan that you're looking for a business to buy. It's a great tool to let you know how much cash flow you have at the end of every month. It is yours to keep. All you have to do is download it on the link below.